Welcome. This is Annuity News Now. The Wall Street Journal is reporting that a 3-year federal investigation is about to culminate in indictments related to hedge funds hiring expert networks. These are firms that rent out former industry executives for a few $100s an hour to hedge funds to get a jump on healthcare mergers. My guest is Peter Cohan, Peter S. Cohan and Associates. Welcome back, Peter.
Well, thanks for having me.
Peter, insider trading is never a big surprise, but the scope of this is particularly awe-inspiring.
Well, it is awe-inspiring, and as a member of two of the largest expert networks, I can kind of imagine how it might happen. I mean, I've always been on these expert networks, and they almost always ask me questions about Boeing because I wrote a book about Boeing. But in my case, I have absolutely no knowledge about the company or its earnings or anything that would really be all that valuable if you were trading on inside information. But what they do is they make you sign these contracts that basically say if you're working for a company that you won't talk about anything having to do with the company and you won't share inside information with clients. And so you sign those, which does a great job of providing a legal protection for the expert networks. But they also don't monitor the content of what you talk about on the telephone with them. So it turns out that it's now about 1:40 on Wednesday, and just a few hours ago, Don Ching Trang Chu was arrested, the first actual arrest on this investigation. And the claim is that he provided inside information on a couple of high-tech companies like Atheros Communications, Broadcom Corp, Sierra Wireless, and I guess maybe some other ones. But I think what happened is he basically tipped them off on earnings before the earnings came out. How he got that information, I don't know. Not a lot of details are available, but one of the things that people were wringing their hands about was, is expert networking, is that illegal? Where do you cross the line between legal and illegal inside information? And it looks like in this particular arrest, what they were doing is being very much on the traditional side of what people would define as inside information.
I understand, too, that the investigators are also looking into whether merger bankers are tipping off investors on pending deals. I guess the big question here is, why would bankers do this?
Yes, that was an interesting one. That was the first story that came out about this last Friday night, I guess, on the Wall Street Journal website. And there were 3 or 4 healthcare mergers that took place in the last couple of years. One was in 2008, 2009, 2007. And the claim is that on one of these mergers, the Goldman bankers that advised the company that was being taken over ended up tipping off hedge funds to the deal. That's their claim. Now, as to why a banker would want to do that, one thing that comes to mind is the possibility that those bankers have investments in the hedge funds that they're tipping to. The other one could be that their bosses are telling them, hey, we make a lot of money off of these hedge funds keeping their money here and doing their trading here, so let's give them a little extra information. So those are 2 hypotheses, none of which have been proven so far, but it seems to me that the government would not have leaked this information to the Wall Street Journal if there was not some substance to these claims, and that they were ultimately going to have some sort of indictments.
Well, one of the great conclusions you make, Peter, is that around 70% of the trades on public exchanges are done by computers, and the other 30% are done by these inside traders. That doesn't leave a lot for the rest of us.
No, I mean, obviously there's probably some proportion of the other 30% that is not insider trading, but you've already got the majority of the trades are already stacked against you, with the 70% are being done by the so-called high-frequency traders, which are basically computers that hold information, hold stocks, I should say, for about 11 seconds. And so, somebody who has the idea of, finding a good company that's undervalued and buying it and holding it for a long time is going to be at somewhat of a competitive disadvantage to these high-frequency traders. Then you add on top of that some kind of level of insider trading that may or may not be taking place. And yes, and the fact that the S&P 500 over the last decade is down 17%, none of these things inspires great amounts of confidence for the average investor.
Finally, as this pans out, what do you expect to see?
Well, I expect to see hedge funds trading on inside information in a big way, because otherwise, I mean, I don't see how these firms can end up paying people so much money, making such high investment returns consistently. Given the level of competition in the market and the amount of information that's available to so many different players out there, it just seems hard to believe that these small players could continue to make such high returns without having some access to inside information. But obviously, the facts are not out yet. So maybe they're just better investors. But if part of being a better investor means trading on inside information, then I think it's good news if the government ends up indicting some of the people who are guilty based on solid evidence that stands up in court.
Thanks, Peter.
Thank you, Scott.
My guest has been Peter Cohan with Peter S. Cohan and Associates. I'm Scott Drake. Thanks for watching Annuity News Now.